Hi, I'm Jacob Mitchell, CIO of Antipodes Partners.
And I'm Andrew Findlay. I'm Managing Director of Antipodes, as well as being a Director of Antipodes Global Investment Company, ASX APL for short. Jacob, what are some of the best ideas in the portfolio today?
As you know, we're always looking for clusters of opportunity, and at any point in time we'll have 8 to 12 clusters expressed in the portfolio. I'll talk to 4 of them, which I think are very interesting at the moment. This idea that you can look for growth and quality in less obvious parts of the market, which at the moment means cyclicals. I think GE and Siemens are great examples of leaders in the case of GE, aerospace, Siemens in automation, that are on relatively low multiples, which are gaining exposure to secular growth opportunity. I think another example, Honda. Honda has its auto OEMs are very much a neglected part of the market. Fears around disruption, and if you think about what you're getting in Honda, we estimate that the emerging market motorcycle business, which is about 1/3 of earnings, now accounts for the entire market cap of the business. And what's interesting about that is it's a secular growth opportunity. Emerging markets, entry-level transport is a scooter, is a motorcycle, and Honda absolutely dominates that business. Moving away from cyclicals that are actually structural growth opportunities towards obvious structural growth. I think software and internet, where we own dominant franchises like Microsoft, Sony, SAP, they remain, clearly they're not as cheap as they were, but for the growth that they are achieving, we think there's still reasonable value. You can also, we can find ways to protect ourselves by hedging weaker versions or companies in the software space that are much more narrow than Microsoft, that are ultimately receiving a lot more competitive attention from the dominant software companies that we own. So there are also shorts emerging in this area. Thirdly, we're more constructive on the cycle, the ex-US opportunity for fiscal stimulus, and so owning consumer-exposed businesses in Asia, in Europe, we think is interesting. They're not priced for growth; they're actually priced for disruption in many cases. And businesses like, in the case of China, the leading private sector life insurance company, Ping An, or the leading restaurant operator in Yum China, owner of the KFC and Pizza Hut franchise in China, are just great ways to participate in that consumption growth. And then finally, just talking about financials, which are a very unloved, neglected part of the market. Look, we think it will be very hard for fintechs to disrupt retail, strong retail, banking franchises. Now, and these have become yield stocks in a market that is chasing yield assets. The most attractive yields are being, offered by incumbent banks. And so in the case, we think Europe, Korea, and in the case of emerging markets also, India, there are great examples, whether it's UniCredit, KB Financial, ICICI in India, all of those types of businesses that are on very, very cheap valuations relative to their future growth.
We hope APL shareholders and potential shareholders have found this video session informative as we try to step up our visibility and communication with you. For any feedback, please reach out to us. You can also contact us or find out more information about APL at antipodespartners.com. Thanks for listening.